Have you ever wondered how you can find an investment that pays immediate dividends plus a 1.8x to 2.0 multiple on your money? So you get paid now plus 3 to 5 years down the road? Well, if so, you are in the right place. Welcome to Purpose Driven Passive Profits.
Hey, accredited investors. I'm excited to announce that we have a new deal right now. It's a 49 unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
The guy standing right there, his name is Nate Armstrong. He's the founder and CEO. My name is Steve Warner. I'm the Chief Investment Officer. And today we are going to pull back the curtain and show you the secret to finding the investments that pay immediate dividends so you can make some cash flow on your long-term investment, plus get paid a huge multiple at the end. Nate, how many times have you had conversations with people where they're like, how fast am I going to start to see my money working for me? That seems to be a pretty big question that we have a lot.
Yeah, it's probably like 75% of the time that's a big needle mover for investors. And you can get cash flow right away. There's actually a couple of asset classes that we should probably cover that deliver that. Maybe even subsets of asset classes, I should say, but I can describe that if you want.
Sure, no problem. I mean, one of the things that I see in syndications right now, you see syndicators a lot of times saying, well, we're going to start paying dividends year 2 or year 3 once the property is stabilized. What actually, like, I feel like the syndicators want to put all these terms around it. Well, we need to stabilize it, or we need to make sure that rents are there. We need to rehab properties. What is it like? What does that actually mean? Let's start with that question.
Yeah, so to stabilize a property means get it to a cash flow positive position. So a lot of times, let me back up a little bit. A lot of times when properties are being sold, they're actually being sold at a break-even cap rate. And I know that sounds a little bit crazy, but the market right now, people are looking for a safe place to park money. And when that happens, when you've got folks with giant funds, New York money, et cetera, that are trying to find safe places to put capital, multifamily is the safe haven. If you look at, especially during the last downturn, 2008 through 2012, multifamily didn't skip a beat. Multifamily rents rose through the entire thing. And so a lot of people are looking for that safety net of multifamily real estate. So that means that a lot of money is crowded there, and therefore sellers still have options to name their price. And usually what they're naming is they're naming a break-even cap rate. And then what the new buyer has to do if they buy it at a break-even cap rate, which I should define, let's just say that the cap rate on the property is 6% interest, 6% interest. And you go and take out a loan from a bank and the loan is 6%. That would be a break-even cap rate. So it's not going to produce so much cash flow beyond the actual loan payment. So what the new buyer has to do is go in and stabilize. They have to go in and improve the property. They have to go in and increase rents. They have to go in and fill vacant units. Or another big one, like we've got a $12 million deal we're working on right now. That particular property, they have 11 NR units. It's NR on the balance sheet. What NR means it's not rented. It's non-revenue generating. And so that's what stabilizing is, going in and fixing whatever leak is in the boat to make that boat rise a little bit faster.
So that's a break-even cap rate, and the syndicator is putting this together. And you're saying the market is so flooded with sellers right now because they know that people are putting money in. The big funds from New York, Wall Street money are putting money in. So sellers are selling at a break-even cap rate. How does, like, if somebody is looking at this, if they're selling at a break-even cap rate, the reason that it takes 2 years to get cash flow to the investors is because the people are coming in, the new syndicator comes in, buys the property, and they have to renovate and they have to up rents in order to get to positive cash flow so that they can pay somebody back. And that usually takes about 2 years, right? Does that sound about right?
Yeah, that's the other guys. That's not us, but that's the other guys. Yep.
So let's talk about if an investor, if somebody is looking at multiple syndication deals, there's one key thing that usually sets people up, the syndicator up, to be able to pay immediate cash flow. What is that thing? What is something that they can look for?
Yeah, a stabilized property, number one. So when you're underwriting a deal, you shouldn't just underwrite and buy at cap rate neutral or cap rate negative or whatever you want to call it. You should buy at cap rate positive, meaning there's positive cash flow. Now we talked for a couple of minutes about what the other guys are doing, what the other ladies and guys in the syndication space are doing. A lot of them are buying value add properties where they have to go in and renovate. They have to increase the rents to see positive cash flow. I don't think that's a good strategy. I don't think that that's very wise heading into the midst of a recession that could be pretty deep. So I think it's much wiser to do, like, the way that we underwrite them is that we want to make positive cash flow from day one. So I look for things like, do they have units that aren't rented right now? Are they maybe giving one of the units away to maybe a maintenance person? Are they storing furniture in one of the units right now? What if we take the furniture out of there and not let dust collect inside that unit and actually rent it out? Things like that, so we can have positive cash flow day number one.
So something else that I want to point out to people, there are some syndicators out there that are so anxious to get a deal that they will take any deal. This year, to get the one deal that we're closing on right now, we worked with them for a year, negotiated, and we also looked at probably 300 to 400 properties. We looked at a huge amount of properties and did underwriting on them to find one good deal. There was also something else that really makes a difference when it comes to cash flow, and that is whether the property is listed with a broker or you find the property off market. If you find the property off market, which we are amazing at, there are other syndicators out there that are good at it too. If you find the property off market, you do not have broker fees and you are negotiating directly with the seller. Nate, can you just walk us through kind of what that looks like and the differences? Because I know you've done deals both ways.
Yeah. So there was actually a study, the Jackson Fuller study. You guys can Google search this if you'd like. But the Jackson Fuller study compared off-market transactions to on-market transactions. On-market meaning listed with a realtor or broker. The stuff that sold off-market sold 19% cheaper. 19% cheaper. And for most of these multifamilies, we're dealing in the millions of dollars. This $12 billion deal, like a 19% swing, that's a lot of money. And it makes a huge difference.
Let's just do the math on that really quick. $12 million, I'm going to round the 19 to 20. That is $2.4 million in difference in funding. In a cash flow number, that makes the difference between us paying cash flow out a year or two down the road or paying it out from day one of the syndication. How does this affect you overall as an investor? It's the difference between like a 14% IRR and a 20% IRR, just so you know how that affects the deal. Nate, back to you. I get so excited about this stuff.
Yeah. So we lean for off market. In fact, all the multifamily properties that we've taken this year, all of them have been off market. There's one exception. Last year, we bought this little 4-unit building that was on market only because the seller actually called us directly from one of our social media ads. And he was already listed on the market, but we were able to work with him directly to buy his property. And we ended up getting a 25% discount from market listed price. And so I would just gear everyone who's out there searching for an opportunity, go off market, no more on market stuff. On market stuff is going to have way more competition.
So right there, if you guys didn't pick up on that, one of the questions that you should be asking when you're looking at a syndicated deal, you're going to jump on a phone with somebody and you're going to talk to them about the deal. One of them you should be asking is, one, was this an off-market or on-market deal? 2, what are the broker fees? And 3, when do we start seeing dividends? We personally at Home Invest have taken the stance that we want to pay out dividends from day one. We believe that we need to give that to our investors, and we we would rather underrate an extra 100 or 200 deals to find the right deal that does that than not. So the questions that you want to ask people are, hey, is there, like, when does this start to pay cash flow? Is there a broker involved? Was this on market or off market? And what is the broker fee and how does that affect the deal? You want to make sure to ask those questions. Nate, was there anything that we missed when it comes to this?
Yeah, I would also say, so one of our investors, very savvy person, he's invested in 10 plus syndications in the last year in the same city that we pull a lot of deals from. And the reason he jumped on our last deal is he said, holy cow, how on earth did you get this thing for $52,000 per door? That's the price per unit that we paid. We paid 2.5 million for this 49 unit building. So we got it for $52,000 per unit. And he's like, how did you do that? How is it even possible? And I said, well, we've been working on this one for a year. This is the deal Steve mentioned. We worked on it for a year. We negotiated hard and we were patient and we didn't have to like overexert ourselves. So we just worked on it and we stayed patient. And that's why he jumped over the moon for this deal. It's why he wants to do several more deals with us because of that. And so go off market, be patient. And then the other thing is that I would not go for heavy rehab projects right now. That's the one thing, like when a lot of syndicators say like, hey, we have to wait until stabilization 2 years from now, 3 years from now. The heavier rehab the project is, the more likely that they're not going to be able to pay out dividends. There's easier projects out there. There's stuff that just need a little bit of carpet and paint. You don't have to do surgery on these properties right now. So I would avoid big rehab projects right now.
Awesome. So there you have it, guys. This is the way that you find deals that pay dividends from day one, which equals more cash flow in your pocket faster, as well as a higher rate of return. If you guys are interested in our deals, you can go to homeinvest.com to learn about the current deals that we are working on. You can book a call with myself or Sue, who is our head advisor. Either one of us would love to talk you through this. If you have money that is sitting in an IRA or a 401k, we can show you how you can free that money up and invest so that you can start to double and triple your money and reach retirement 10 to 15 years earlier. Nate, anything to say before we log off today?
Follow Matthew 25 and Luke 19. Don't let your money sit buried under a rock. Double it.
That is our general thought process here at Home Invest. That is the Bible verse that our whole business is based off of. We want to make sure that you invest wisely, that you're good stewards. We'll see you next time on Purpose Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Hey, accredited investors. I'm excited to announce that we have a new deal right now. It's a 49 unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
We'll see you soon here on Purpose Driven Passive Profits.